Let's be honest, we've all been there. You nail a massive winning trade, you feel like an absolute genius, and then, somehow, you give it all right back. Today, we're diving deep into that frustrating cycle of self-sabotage in trading, and more importantly, how you can finally break it for good.
I mean, does this sound familiar? That gut-wrenching feeling? You execute a trade perfectly, your account balance shoots up, and for just a second, you feel invincible. But then, it's like you're in a trance. You make one reckless move, then another, and before you know it, poof, it's all gone. And you're just left staring at the screen thinking, what just happened?
Well, here's the good news. You're not weak, and it's not some kind of character flaw. It's actually a predictable and totally preventable psychological pattern. It happens to tons of traders. And understanding this cycle, that's the very first step to breaking free and finally getting consistent. So to win this battle, you gotta know your opponent. And in trading, your biggest opponent isn't the market, not even close. It's the invisible enemy that's hiding inside your own head, and it's powered by some seriously potent brain chemistry. Okay, let's meet the main culprit here, dopamine. Now, we all call it the feel-good chemical, but its real job is all about motivation. And here's the kicker for us traders. It gets triggered by the possibility of a win. That means it floods your brain with this powerful urge to act long before any profit actually hits your account. Trading psychologist Mandy Rafsanjani just nails it with this quote. You know that sudden, irresistible urge to jump into a trade, especially when there's no real setup? Yeah, that's not some sixth sense you have. That's just your brain chasing a dopamine hit. It's a recipe for disaster. Think about it like this. You're walking down the street, not even thinking about food, then you see an ice cream shop. All of a sudden, you can almost taste it, right? You're already picturing how good it's going to be. That powerful craving, that's dopamine. It's the exact same thing that happens when you see a big green candle on a chart. So this really splits traders into two very different camps. You've got the dopamine-driven trader who's basically addicted to the thrill of the action. And then you have the process-driven trader who actually gets satisfaction from executing their plan perfectly. So take a second and be really honest with yourself. Which one sounds more like you, especially when things get intense? All right, so now let's dig into how this dopamine-fueled impulsiveness creates these specific mental traps. Psychologists call them cognitive biases that make us do totally irrational and expensive things, especially when we're flying high after a big win. So the first and maybe the sneakiest trap is the house money effect. This is a crazy powerful bias where your brain decides that your recent profits are play money. It doesn't feel like your money yet, so you're way more likely to gamble with it, often with, disastrous results. The casino analogy is just perfect here. I mean, casinos are masters of this stuff. They don't give you chips by accident. It is so much easier to push a stack of plastic chips into the middle than a thick wad of actual cash. Well, after a big win, your profits become those casino chips. Easy to risk, easy to lose. Next up, we have the illusion of control. Oh, this one is seductive. It's that feeling you get after a couple of wins where you think you've somehow cracked the code of the market. You start to believe your skill can bend what is, in reality, just a game of probabilities. And that overconfidence, it's your downfall. And the results of this illusion are pretty severe. It pushes you to overtrade, to make emotional decisions, and to throw risk management out the window. In fact, a study of traders in London found this really direct, kind of ironic link. The more a trader believed they were in control, the less money they actually made. And finally, we've got the self-attribution bias. This is the ultimate protector of our ego. It's a mental shortcut where our brains create two completely different stories, one for our wins and a much more convenient one for our losses. So when a trade goes your way, what happens? You immediately chalk it up to your brilliant analysis, your perfect execution. You feel like a market wizard, a financial genius, and man, is that feeling addictive. But when a trade goes against you, that wasn't your fault. No way. The market was just being a totally irrational, or it was just a string of bad luck. Now, this bias feels good in the moment, but it is a silent killer for your trading career because it makes it impossible to learn from your mistakes. And look, this isn't just some theory. This is backed by science. Research actually confirmed this bias in action. They found that the higher an investor's recent returns were, the more they credited their own skill, basically setting themselves up for a huge fall. Okay, so we've diagnosed the problem. We've unmasked the enemy within. Now for the most important part, how do we actually fight back?
This is all about building a system of practical, real-world defenses to protect your profits from, well, from yourself.
Trader Justin Bennett has this super simple but incredibly powerful 3-step process. First, right after a big win, update your journal. That simple act of writing it down makes the profit feel real and earned, and that directly fights the house money effect. Second, take a break, walk away, for at least 24 hours. Let that dopamine and overconfidence settle down. Finally, when you come back, start smaller. Cut your position size to ease back in and guard against any leftover emotional urges. Next, you need a set of non-negotiable, carved-in-stone rules. The 3 strikes rule is a classic for a reason. 3 losses in a row, you are done for the day. Full stop. No exceptions. And never, ever chase a loss trying to make it back. That is the fastest way to blow up an account. And finally, get rid of fixed daily profit targets. They just force you to take bad trades to hit a random number. Think of this as your toolkit of mental firewalls. Using a checklist after a big win forces your logical brain to get back in the game. Setting a maximum number of trades per day gives you a hard stop before your discipline just evaporates. And my personal favorite, adding a simple 30-second delay before you click buy or sell, it can be an absolute game changer. It gives your rational mind just enough time to catch up to your impulse.
All right, all of these strategies, all these tactics, they all lead to the single most important mental shift a trader can ever make. And this isn't just another tip, it's a fundamental change in how you even define success.
This quote just says it all, doesn't it? The real goal isn't the money you make on one trade. The real goal is perfecting your process. Did you follow your rules? Was your execution flawless? That is what matters. And this is the key. This is how you unlock long-term consistency. You have to detach your satisfaction from the outcome of the trade and attach it to the quality of your execution. If you follow your plan perfectly, it is a successful trade, even if it ends in a small, managed loss. That is the mindset of a pro. So I'll leave you with this one last question to really think about. Are you trading for that fleeting thrill of a win? Or are you trading for the deep, lasting satisfaction of a perfectly executed plan? Your answer to that question is going to determine your destiny as a trader.